Good afternoon, everyone. This is Yogi Berra once again. Today we'll be covering winning trading platform. It is basically the introduction part of your real analysis. In our last two webinars, we covered the introduction to Forex, basically going through the types of orders, types of entries, types of currency pairs, etc. From now on, we are entering towards real analysis. But for us to be able to go ahead and use the real analysis, we need to know the ins and outs of our trading platform, which is in our case going to be MT4. However, as usual, since we have new people joining the webinar today, I would like to cover the risk disclaimer for your attention very briefly. In short, trading Forex on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade Forex, you should carefully consider your investment objectives, level of experience, and risk appetite. There is a possibility that you may sustain a loss of some or all of your investment, and therefore you shouldn't invest the money that you may not afford losing. You should be aware of all the risks associated with Forex trading and seek advice from an independent financial advisor if you have any doubts. And you may ask, who is this person telling me? Well, my name is Yogi Berra. I've been a Forex trader since 2005, and it's basically my 10th year of Forex trading experience and training experience as well. For the 10th anniversary of my Forex career, I'm writing right now a book called Forex Not for Dummies, and it is planned to be coming alive by the end of 2015, maybe with some delay towards the first quarter of 2016. Nonetheless, welcome to today's webinar. This is the part of the complete course with Orbex. It is sponsored by Orbex, therefore most of you are coming because of this webinar. In general, this complete course costs $2,500 with my private courses, private training. However, with the complete course is going to be available for you free of charge if you meet up the expectations or the requirements from your broker Orbex. So let's start. How do you define a winning platform? What makes you to make sure that you are trading with a sustainable platform that you can actually rely on? There are a number of elements that you need to be aware when you're selecting your trading platform. Number one, it should be as simple as possible. Number two, it should be accurate. It should give you the flexibility. Number three, it should provide you high quality graphs. Operating speed should be sustainable and fast. It should give you language support, not only the language that you speak, but also the ability for you to write new codes, etc., just to enable you technically. It should be strong and it should not have bugs. Okay, these are for me 8 credentials of having a sustainable trading platform, which I can qualify it as a reliable platform. I know there are many platforms out there, but MT4, in another word, MetaTrader 4, has been around for the last, well, a number of years from MetaCodes, which enables you as a trader to trade the way you want. It provides you the ability to carry out your technical analysis. It provides you the ability to place advanced commerce orders. It enables you to trade with customizable charts and the possibility of, using EAs or robots or automated trading strategies. And a simple trading platform as it is, it enables convenient access to the most advanced tools within the Forex or FX market. Okay, this is in short an introduction to trading platform. When you go ahead and start your MT4, this is more or less the view that you should have. At least this is the view that I always have myself for the beginning. Okay, I will tell you the parts that I use all the time, and I'll also tell you the parts that I make sure that is not there. Never. Okay? There are some psychological elements involved on your trading platform which you should as a trader make sure that doesn't bother you. There are some psychological points which can enable you, subconsciously do the wrong things, which I'm gonna teach you how to avoid. Okay, this involves color, this involves some parts of visual elements of your trading platform, and our job is gonna be basically to make sure that you do not make the daily mistakes of other 95% of the people. Correct? So this is where we are gonna start. But before I go ahead and discuss these things more in detail, I would like to tell you that this webinar is intended to be interactive, which means you should be asking questions. Since I see a lot of people who is joining the webinar for the first time, you can ask your question with the chat section on your right hand side, and you should be expecting a response on your question by the end of the webinar. By chance, if I have missed your question, please just remind at the end of the webinar once again. Okay? So when you start your trading platform, the first thing you will see on the top of your MT4 is your toolbar, the section right over here. This is called your toolbar. It gives you the vital tools that you need as a trader. By using this toolbar in a professional, in a sound way, you can make sure that you get the best out of the trading platform. What I really mean by saying making the best out of trading platform is just the following, okay? There are various things that you need to have on your MT4, on your trading platform. As an example, the section over here. This is your chart shapes. I always recommend you use two chart shapes. Number one is candlesticks. Number two is line charts. Okay. The reason why I recommend it, we will cover it in a bit in a live MT4. Okay. I just opened a new demo account, and we are going to be covering the things. Basically, this demo account is fresh, and we need to basically cover up the things that we can use. All right, when we start your MT4, it just starts like this. Okay, you have a bunch of things over here, you have all the market watch, etc. But what do you do that you do not overcrowd your MT4? Okay, first you need to understand how to place your charts or your toolbar that will not bother you. As an example, in my actual performance on my actual desk, I do not have the following time frames. 1 minute, not necessary. 5 minutes, I don't need it. 15 stays, 30 minutes, I don't need it. 4 hours, I don't need it. So on my private trading desktop, I only have 15 minutes, 1 hour, daily, weekly, monthly. All right. So right away, we see that we got rid of a number of things on our toolbar. The second part is a number of other tools, especially if we go ahead back to our section, you will see we have the chart shapes, we have the scroll button, chart shift, templates, etc. Okay, let's go back there. Again, you can right click on your toolbar, press customize, you will see a number of things that's relevant for you. So starting by bar chart, I do not recommend you using because it's not really eye friendly, so get rid of it. Tile windows, not really necessary. If you wish so, you can have it. I don't need it because I'm using in general 3 or 4 monitors, so it gives me the opportunity to already tile it automatically. I use generally the shortcuts for zooming in or zooming out. So if you want, you can get rid of it. Zoom in, zoom out. Auto scroll, chart shift, very important. Period, since we have the time periods over here, we don't need it. Templates, we don't need it. Indicators, again, we don't need it. So when I close it, again, very simple part. And then we have the overall other drawing tools. Okay, these are the drawing tools that we have. All right. The drawing tools, again, some parts we don't need it. You press right click, customize it. Vertical line, I don't need it. So move it. Horizontal line, need it. Trend line, need it. I don't need this one. Fibonacci retracement, I need it. Text, I need it. Text label, I need it. Arrows, I don't need it. And then over here, I need the linear regression. And just for my personal use, triangle and rectangle. Okay, this webinar is recorded, so you will have the recording afterwards for you just to see. This way, at my fingertips, I have only the tools that I really need. Okay, back to our presentation file. So from this many tools that was on my desk, we end up, after customizing it, just a line of tools, which enables us to reach the important tools whenever we need them, rather than always, invading our trading desktop. Okay, so what are these tools that we kept? All right, and how do we use it? First, very important thing, when you start a chart, you have this auto scroll open. I always recommend you to use it in a wise way. Okay, use it in a wise way. If you are trying to analyze the past movements, you cannot have it on, because you can see I leave it, it just brings me back. What auto scroll does is that each time there is a new candle evolving, it shifts your chart one candle to the left. Okay, it just keeps shifting it. That way, no matter how much you scroll back, it will just bring you back automatically. Meanwhile, if you have basically unselected it, if you have deselected it, move it back. Let's say you have gone way too much back and it's taking too much of your time to bring back. The chart shift, meanwhile, if you press it, will bring you to the last candle automatically. This is why I like these things very much. Okay. On the other hand, the reason why I got rid of the 1 minute, 5 minute, 30 minute, and 4-hour chart or time frames is the fact that they are annoying me. They create an urge for me to go back to those time frames, although I don't need it and they are not part of my trading style. Okay, that's the reason why I got rid of them. So in short, if you want to make sure that your chart is basically serving what you need to make sure that you have what you need on your desk available and get rid of the things that you do not need. All right. It involves basically getting rid of the time frames that you don't need, because as a human being, we have this urge to go and test the things that we don't need or we want to see, etc. These are, as an example, for my case, I'm a swing trader. A swing trader means I trade long term. I tend to put a position, analyze it, set and forget it. We have a Skype group the other day we were discussing. I placed an order and I set and forgot it. People come quite often tell me, well, how can you rely on it? Because of our analysis that we have. If I go ahead and every second check it, what's happening, I'm going to obviously get the results that are not really, turning out as the best. Okay? So I will basically have a human error involved, whereas my mathematical analysis will show that if I wouldn't have involved a human mistake, I would have been a winning trader. Okay? So what are other tools that we can involve that we can make the best out of it? These are much more extra tools. As an example, what I generally do not have at all are the following. You can see on your MT4, whenever everyone opens a position, let's say at this moment we are planning to place a buy order. This is just, well, let's say that we do. As we place a buy order, everyone keeps this terminal down here. This terminal, although it might be good, I consider it as an evil tool for the fact that it basically makes me go ahead and check whether I'm making a profit or a loss. Like now it is. So whenever I have this terminal open, I would make sure that I have the news part or any other section, whatever I can think that wouldn't really bother me, open. That way that, in a way that I wouldn't go ahead naturally, look for, oh holy moly, I'm making a $122 loss. When you have $122 loss that you see, you get to panic, right? Or when you see this around, and when you see that you are making a profit, you again get to panic, saying that, oh boy, I need to exit my position. This is part of your psychology. Okay, so for that reason, to cut it short, you can just press the close. You will not have it. Since you would only have this position, set up for automatic leaving the market or pending orders, you wouldn't really have to go ahead and watch it. You would only have to, from time to time, open it, go to your account history to see what your performance has been so far, that you can analyze it and make a lesson out of it. Okay? All right. So on your main tools, you have these sections. Okay, we briefly went through them. I do not use the display bar chart. It's not relevant. But I use the line chart for the fact that they can tell me where the direction is moving, where the market is going to. So have it in a way, let's say, that if you have enabled it this way, because it's not really giving you a bar chart or candlestick or nothing, you can just zoom out and see where the market is going without being subject to overall market movement. You can even go ahead and draw your trend lines, etc. Since you wouldn't have a candlestick to look for highs or lows, you basically would assume that you are going with the real trend, because this is the trend. This is an average of the market. This is applied line chart, in short, the simplest way it can. What I used to do when I barely started trading for the beginning was I would actually put it on a line chart and ask my small cousin, who was that time 7-8 years old, to tell me, do you think it's going up or down? If he would tell me that it's going up, I would buy. If he would tell me that it's going down, I would sell. That way, I would avoid being biased, because at the end, a small kid doesn't know the market, and he can just tell me what is really is there, rather than me as a trader trying to see what I want to see. Okay, that's a very, very important point. You don't try to find what you really want to see. You try to find what is really out there. Okay, so for that reason, we can quite often use the line chart, but our major analysis should always be taking place on display candlestick analysis. There is a solution for it. You don't necessarily even have to have it. If you just press Alt 2, you'll go on to, let's zoom in. you'll go onto candlesticks, press Alt 3, you will go to line chart, and if you want to have the bar charts, press Alt key 1 and you'll go for it. So I'll go for candlesticks only for now. Okay. Afterwards, we have the zoom in, zoom out. There is a button here for zooming in and zooming out, these things. But one thing that we want to use is we want to be as prompt as possible. Whenever we want to analyze the market, we have to be as fast as possible. And there is an easy way for us. You have the plus and minus button. When you press the minus button, the chart will zoom out. When you press the plus button, the chart will zoom in. So you don't necessarily need these zoom in, zoom out buttons either. That's why I quite often don't have them. That's why a bit ago we said we don't need them. Remember, we only need the things that we really need to have. Okay? So back on the section, periodicity tab, it gives the time frames. We don't need it since we have the time frames over here, the ones that we need. Okay. We have then indicators tab. We don't really need it. I'll show you why in a bit. Templates tab, I don't need it. So that's why we got rid of them. So let's go back to our analysis. If you want to set up a time frame, you can also right click on your MT4, choose the periodicity there. If you want to check your template, right click, press the template, whatever it is that you are after. If you want to refresh, press refresh. And if you want to do other activity, as many things as possible, you can also do it over here. Okay, I suggest to use the grid all the time. Okay, all right, let's move on to the next part. The chart types we just briefly discussed. The language comfort. Obviously, not everyone is flexible in English language. You can choose the language from your MT4 directly over here. There are a number of languages that you can choose. Remember one thing, that whatever language that you are choosing, you just need to refresh or restart your MT4 in order to be able to apply it. Okay. Market watch, which is this section over here. Quite often you don't also really need it in a big way, but the way I recommend is that you don't need to have the time over here. So time, get rid of it. Auto arrange, you can get rid of as well. Grid, you can get rid of as well. This way you only get to see whichever part you want to see. I would always put it for 2-digit for the following reason. First off, it gives us the opportunity to see the market in a way that we can see blue or red. It also gives us, let's say if I'm looking for USD CHF, it gives me right away an overall view that the market has had more or less 100 pips movement, okay, from 94, 93. Or if I'm looking for USD GPY, I can see that the market is in a range way because there is not more than 100 pips. You can move out, you would see that it's actually only 60, 70 pips of movement. So it gives you the opportunity to see it in a wiser way. But always try to have your high and low in there so that you can look at the market and see it from numerical perspective right away. Okay? But rather than that, try to have this as small as possible. Just the currency names is enough. Okay? Now, let's move back to the next point. Market watch, symbol, bid, ask, high, low, time, right click, etc. So the symbol is the currency pairs. Okay? Over here. That's all we need for now. The rest Just use your logic, try to understand it a little. Okay, now to be able to create a new chart, you can use so many different ways. One being, let's say if I want to open a USD CHF chart, all I need is to drag and drop a USD CHF on my chart, and it will open right away just like this. Okay, if I want to open USD CHF in a new chart, I just right click on it, press chart window, and you'll see that it will open me a new USD CHF. Or another one, you can just go ahead, you see this green plus button, press it, select the currency pair that you want to have, right away you'll have your chart open. Very simple, I believe. New entry. I will just show you one thing that you probably don't know. Okay, now look at the part. Okay, we are making $104 profit, whatever it is. We are having a long position, correct? So we play buy, and we are making $104, and we can play sell 2 lots. You will see that we are making $40 loss. Indeed, there is actually a way in MT4 to basically make the best out of what you have done. You can double click on it. What you would do is that you would select the multiple close by, okay, because I think I selected either of it. 1 second, we are gonna select the buy one, multiple close by, and we need to select the sell one. The second I press the multiple close by, it will close. Look at here, we are making $54 profit right now, because let's say we would be imagining that we were gonna make a loss. There was a big news coming out. So if I would have select multiple close by, both of the entries would be closed right away, and instead of $54, I wouldn't pay for the spread of the sell position, because I was actually trying to hedge my risk, reducing my risk involved. You can see that the 2 lots that I was selling became 0 lot. Sell, there is no stop loss, there is no nothing, it's just profit 0. I only had the $94 of profit. This is something that I quite often use when, let's say, I'm making a profit and there is a big news coming out, and I don't want to be, risking to, how can I say, I don't want to risk the possibility of slippage and so on. That way I get the best possible results from the market. Even if there is a slippage, when I close the multiple close by, I get actually better results. That's something that not everyone uses. I hope you manage to catch it up. Okay, then we move on to something else. Selecting the orders, the desired pair of instrument, etc. I don't like using the theory, but just right away show you. You have multiple ways of setting an entry. Let's say you have analyzed the market and you believe that the market is gonna be rising over here 1202 level, and from here drop. What you can do is that you right click there at that exact level, and you can select sell limit. It will, okay, since it's my first time using this laptop, it's not configured yet. You press sell limit, right away you will have a sell limit there. What does sell limit mean is that whenever the market will go from here to the 1200 level, you will right away have an automatically sell order triggering. This means if you have analyzed the market for the future, you don't necessarily have to be behind your laptop or PC in order to trigger a position, but your platform will automatically trigger it because it's already there, it's a pending order, okay? The other way around, if you want to, let's say, again, do another kind of a buy order, let's say if the market goes against you and you believe that it was going to go from here and reverse back, but you also want to reduce your risk, what you can do is that you press trading, you press buy stop. That way, you do not necessarily put a stop loss for your sell limit order, but you basically create a hedging environment for you that you basically, in the worst case, if the market goes against you and it starts reversing backwards, you can close the buy order without making a loss, okay? Buy order in a profit, and when the market starts reversing backwards, you close your sell order, and that way you reduce as much of your risk as possible, the stop loss risk, okay? This is something that you can use as well. When you press the new order, you also have a solution here. You can trade with as many pairs as possible. You select the symbol, you select your trading pair, you select the volume, stop loss at the level wherever you wish. If you want to put any kind of comment in your order, you can write it in here. Let's say you would write pending order, let's say, over here. Or actually, let's look at the market and put a realistic order. So because of this candlestick, there is a possibility that the market is going to go upwards. That's why I previously put a buy order. And let's say we again would like to buy, okay? And we want to say that candlestick analysis says buy. Bullish or whatever. You put it, you can select buy market, and right away you will have a buy order. And what will happen over here is that when you close your order in your account history, you will have if you would add the comments over here, you would get to see the comment. As an example, like the similar thing that we did, the close H buy order, you have a comment in there. Okay, let me demonstrate it for you. We close it, and you can see that it says candlestick analysis bullish over here. Okay, the reason why I close it is that it's a demo account. It doesn't hurt me financially. So do not just copy paste whatever I'm putting. There would be hypothetical orders that I would put from time to time. Let's say we would again go long at this level, okay? But we see that, let's say, we are not really willing to risk 2 lots order. So what we can do over here, you can come and double click on your order, go to your volume, select, let's say, 0.2 lots, and press close. The second you press it, your order will become from 2 lots to 1.8 because 0.2 lots would have been closed at this level. And it would also show to the order type, 257 something. This is the order over here, 257 order. That way you get to analyze the market in a proper way that you would make the best out of it based on your needs. In another way, you have placed it, but you haven't placed your stop loss or take profit. What you can do is that you go ahead and left click and hold with your mouse and move based on the level that you want to have. Let's say we want to risk 200, 300, well, the 30 pips we want to risk more or less. The second I let it go, it places my stop loss. And since it's a buy order, if I left click and hold it and drag upwards, because we risked 30 pips, we want to make 45 pips, correct? So I need to make it 45 pips. The second I let it go, it places also automatically the order for the take profit as well. Okay, this is pretty much about it. And if you want to click and close right away from your chart, because if you remember, I told you that I don't like having my terminal open, you can also do it right away. Right click on your line which shows your order type or order, right click it, it will give you to basically close or modify. Let's say I want to modify it with something, you can open it and you modify it. In another way, you can also close it, but it will close right away. But also you can add trailing stop. Let's say we want to have 100 pips, well, 100 points, sorry, of trailing stop. You press OK, and there it goes, it will apply. Trailing stop is a type of an order, would mean that the second your entry, because we selected 10 pips or 100 points, the second our order would go 10 pips into profit, our stop loss would move from here to the entry level. Okay, that way we would make sure that we follow and we reduce the risk as much as we can. Okay, we selected the 10 pips one. Hopefully the market will go in our direction and we'll see how it works. Okay, let's move on to the other part. The opening and entry, we pretty much covered it. Closing and entry, again we covered it a little. Customizing the chart, this is my favorite part. Okay, in my chart I generally do not have black background at all, because for me black is negative. I don't like negative. I want to be positive, because when I make a position, I tell myself that I'm going to make a profit out of this position. I tell myself that I'm not going to make a loss out of this position, and I tell myself that I will protect my equity, which all of these three words are positive psychologically. Okay, you can right click on your chart, press properties, and follow the following, which is psychologically proven that will help you to increase your profitability. I generally use gray, dark gray over here as a background. Foreground white, grid generally is black, bar up I use dark green, bar down I use black. Bull candle I use dark green, bear candle black. And there we go, we have a chart. Okay, you may ask me why I didn't use red for bearish. Generally for me, red symbolizes aggression, which I don't like aggression in my trading activity, because overall trading is anyway quite often stressful. So why to add extra aggression or stress element to our operation, right? And I guess you would agree with me. So when you use green and dark black or any other, you can, if you want to really use red, you can go ahead for your bear candle, use this saddle brown, or over here maroon color, which is more or less red, but it doesn't give you the aggression. It's not that bright red. Okay, it's up to you. Okay, so what is it that we can understand from here, that why we chose these two different colors? First off, in our following strategy, it will help us to strategically locate our Fibonacci levels. Okay, I know some of you don't have a clue about Fibonacci, but bear with us. It's around 5-6 sessions from now we will cover the Fibonacci. It's basically this amazing tool over here which gives us the opportunity to draw in the market and be able to predict the market positioning. Okay, let's see over here. If you put the 25, there it is. You can see the market generally obeys the Fibonacci, but you need to put it in a right place. I selected it on hourly time frame just because it's a test mode, but you do not use Fibonacci on hourly time frame. You generally use it on a bigger time frame, like a weekly time frame. Okay, and I accidentally pressed around with my action. So we can select our Fibonacci over here, and if I zoom in, you'll see the results much better. That small tool that we used as historic based tool told us that it was a great opportunity to short at 61.8 level at 1200, which is also psychological sell level, and we would be aiming to, well, the other way around, also 38.2%, which is the other way around. We would have aimed to exit the market at Yagoob's 0.886% custom Fibonacci level. And you can see that this was the exit level, which the market touched yesterday as its lowest point. So sold from here, if you would have, and you would have exited there. And right now we are looking for the market to reverse back to 61.8%. But we would only use it only if we have a confirmation by the end of today or by the end of tomorrow. Okay, just something that additionally we could cover. Custom charts, we went through this part. Saving, loading a template, very important. Quite often I end up using a template where I customize my trading per one trading tool. Let's say in this case we have analyzed the market simple way for gold. Yeah, so if you have done an analysis and you have already got yourself a template that you believe you should save, what you do is that you press right click on your desk, you go ahead to your template, save template, and type gold simple analysis 2506 or 25 June. That way, let's say even if I go ahead and ruin this, close the chart, etc., anytime I come back to my desk, I can right click on my chart, go to template, select the template that I had. The same thing would be on my desk right away on my fingertips. Very simple, I believe. Okay. All right. Before I go to the next level, let's check if there is any question. Melissa is asking a question. Melissa, I will get back to you personally today, latest by tomorrow. Please, let's try to communicate over Skype. I've also received your email. I just didn't have the time to go ahead and find a solution for you. But we'll do our best to accommodate you, don't worry. Kim is asking, what if you have 4 active entries and you only want to close 2 out of the 4? It's very simple, Kim. The same as 4, 5. You can use on out of them. Let's say like this. I'm gonna open sell order sell order, buy order, and another weird buy order. Okay, so that we can look at it. First off, you need to understand, go to smaller time frame to see where you were, and you need to understand your terminal over here, because of the fact that you have multiple orders at on one pair. Okay, what you can do is that whichever one is it that you want to close, you can right click, make sure that you are selecting the order number, write down the order number on a piece of paper, because you have already hedged it. So even if you take a year, you would not make extra profit or loss because your positions are safe. You are not subject to slippage or nothing at all. May the market have so. What you do is that you go ahead, double click on the profit, you select multiple close by, this will open. Okay, so let's say I want to multiple close by the following: sell order, because, and you need to know that which one you are selecting. I'm selecting the first one, the biggest buy order. Okay, double click on it, it opens, multiple close by, and I want to close it with a sell order. Obviously, if I select it, the following will happen: my 1.8 and 0.2 lot that I had, the following, these ones would basically disappear. Okay, 0.2 was closed, and if you look at the trade, the 1.8 should 6 it was should have became 1.4. It's basically deducted. If I want to do multiple close by, you can see that it's not possible. In order for you to do a multiple close by, you need to have opposite entries. Okay, if you are buying, you need to have a sell order. Let's say a total of our order here is 2.2 lots. Okay, you can order 2.2, you press sell so that you can close everything at the time. And what I do is that you come right click on it, okay, and select multiple close by. Then you can select different things, and that way you are basically ending as much as you can, and there it is. Okay, the reason why all of them got closed at a simple point, you can see over here, was because I used this webinar is sponsored by Orbex. So I highly recommend you to go ahead and, if you don't have a live account with Orbex, to go ahead and try to have a live account. If you have if you don't have a demo account, go ahead and try to have a demo account and test the platform. Try to understand the things that we are discussing. Okay. Regarding the analysis that we are discussing, in general, people's success depend on 3 analysis types. Okay, and there are 3 major analysis types. One is technical analysis, which pretty much 100% of the people are familiar with. The second one is fundamental analysis, and the third one is flow analysis. When there was a survey to all the Forex participants, this was the results. Okay, by complementing fundamental analysis with technical rules and combining the 2 approaches together with order flow movements, you will be able to form a more accurate picture of both where and when to invest. That's why in the strategies that I'm using, I'm not just a blind person with the technicalities saying that, okay, the market is going this way based on technicals, but I also use my logic and try my best to understand which direction is the market moving based on the fundamentals as well. And I also heavily follow the big banks. My reasoning to follow the big banks is very simple, for the fact that they are the ones who make the market. When, let's say, UBS enters the market with a $2 billion order, I am no one with my $5 million order or so. Okay, that's why you generally need to be able to combine. And when it comes to fundamental and technical analysis, you need to understand why they differ from each other. First, I have a simple comparison chart, table here. Fundamental focus on actual value of events, at the moment, what is really happening right now. Whereas technical analysis focuses on past picture, what has happened in the past, so that you can have kind of a indication for the future. Again, fundamental analysis study information that relates to the socio-economic events, whereas technical analysis study charts to identify patterns and the trends. Okay, so fundamental analysis use top to bottom, from economies to companies, or bottom to top, from companies to economies, whereas technical analysis uses statistical indicators, basically the numbers, mathematics. Okay, that's so for it for today. In our next webinar, we are going to be covering the technical analysis. Okay, we will cover the technical analysis. We will go through the in-depth parts of the technical analysis and enter as much as we can. These things together, if you follow it, in the next webinar, we will have also a homework for you. So if you follow it closely, you will be able to drastically increase your profitability. And by the end of this complete course, if you follow it, you will be able to increase your profitability close to 60 to 70%. I am not going to be able to teach you to make 100% profit. Well, I don't have that golden stick yet, and I don't think it exists. So 60 to 70%, and we will always use 1 to 1.5 risk ratio. We use 1 to 1.5. Let's say if you would have only 60% return, okay, it means 6 out of 10 we would make profit. Okay, this is the profit, and this is the loss that we would make. We would make 4 losses to make 6 profits, okay, on average, let's say. Since we are using 1.5 return, this actually would translate into, we would make 9 to 4, because of the fact that 4 multiplied by 1 is 4, 6 multiplied by 1.5 is 6. 9. So although we would make basically 60%, our profitability would become as much as this. So if you were risking at any entry $100 for 10 in each entry, and we would enter market with 10 positions with the strategy that you're going to be getting, you would be basically making a loss of 400 and you would be making a profit of $900. Sorry for my amazing handwriting. And at the end, out of 10 orders, despite that you would have 4 losses, you would still be profitable by $500. Okay, this is so far it, everyone. We will go through the technicalities and much more in our following webinars. I really would like to see you in our following training. On next, probably Thursday, you will receive an email from me or from the company, and make sure that you stay profitable until then. Don't risk anything that you cannot afford losing, and also use your logic rather than someone's words. Okay? Before you finish up and leave the webinar, would you please give me your short feedback if you enjoyed the webinar and if you would like to see any additional changes in the future? And rather than that, I appreciate your time and thank you very much.